Oh, there we go. All right. Good morning, everyone. Jules, will you pay up, please? Will you take 10? 10. Oh, yeah, or whatever. Just 20. Pay 20 if you have to. I want to get. All right, morning, everyone. Let's get going here. All right. Last night was another wild session in global equity markets. U.S. markets, obviously, we started out under significant pressure, only to really make a reversal. We basically hit the lows of the day around. I think around late in our session, but the reversal really came on the back of the Fed's Plosser, who came out and said that the Fed might have to hold off on stopping quantitative easing, which obviously got markets to really reverse and reverse quite hard. I think that a big part of what you've seen is over the last couple of days, you've obviously seen some of the longs start to really capitulate and the soft holders to really come out of the market. I think also, especially in the States, we've probably seen a hell of a lot of guys that have started to short some of the momentum players, some of the trend traders, and they would have gotten on the back of the shorts. It probably squeezed a lot of the shorts out yesterday. I don't necessarily know if they were adding so much to the longs, but that was probably the shorts getting squeezed out. It would be too brave to say that could be the bottom, I think. But at least in the near term, probably put in at least some sort of short-term bottom. So we'll have to watch and see how things go and play out from there. We had a lot of different stuff going on with Netflix. Getting killed after they reported the previous night's numbers after hours. We had Goldman Sachs that was actually down on the day, even though they beat on earnings. Trading revenue declined more than its rivals, so obviously the market didn't like that. And then we had a hell of a lot of economic data on the day. Unemployment benefits claims hitting a 14-year low. So there's a lot going on in terms of what we're looking at on the entire day, and I think that we're going to have to. But at the end of the day, we're going to have to watch the market action. We did see one thing that was really kind of leading markets yesterday, and I think it was probably one of the reasons for the prior day's implosion, and that's the bond yields in the States. From some of the guys that we've spoken to, a lot of the big banks, a lot of the big hedgies have all been short bonds, expecting the Fed to wind down its quantitative easing program, and they really got caught on the wrong side of the market, and because they couldn't get their bonds out quickly enough, they just started hitting other stuff to kind of hedge themselves. So it's possibly one of the reasons why markets came under such extreme pressure yesterday. All right. In Asian session, we had a little bit of a weaker session, and we've actually had in 3 days. Funny, because the U.S. finally reversed yesterday. Asia just seems to have totally decoupled from the U.S. We saw a couple reasons for that. I mean, Japan, I'm not so sure why Japan under pressure, because the yen wasn't really weaker. It wasn't really stronger on the day than it was the prior day. Shanghai it was under a little bit of pressure because they were supposed to link markets there between the Shanghai Composite and the Hang Seng. That looks like that could be off the table now, and I think that's one of the reasons why we saw Shanghai come under a little bit of pressure. So we did see Australia that outperformed again for about the third or fourth day in a row. We saw mining stocks just have a gentle bounce there, but bottom line is, I think very kind of confusing action out of Asia, or just kind of doing the opposite of whatever has been happening in the States of late. All right. Market data today, we've got very little. We've got General Electric and Morgan Stanley that are going to report in the States. We've got, in terms of the data out of Europe today and in the States, we've got construction output, we've got housing starts in the States, we've got building permits, and then we've got University of Michigan confidence numbers. All right, and that's kind of it. Let's have a look at the maps. All right. The first thing that I wanted to have a look at is right here. This is this is actually the 5-year. I don't know why. My other bond charts aren't working for some reason. But this is in itself kind of for some reason it's I don't think that the duplicate action here is quite correct, but you can see we had a monster reversal off of the lows on bond yields. So this is the yield that we're looking at. I mean, this sort of action in percentage terms is absolutely unprecedented. We're talking about basically 20% moves in a day, and this is in the bond market. And that's one of the things that we talked about. You know, the whole market, I think, being being short of bonds, and when this sort of action happened, remember we're looking at the yield here, so this is an inverse move of the actual bond price. When we saw this thing get hammered, I think it was a big leader of the market to the downside. So one of the things that I think is absolutely paramount for us to watch over the next couple sessions, and maybe the most important thing for us to watch as a leading indicator, is probably the U.S. Treasury market, and also a couple of the key European bond markets as well, most specifically probably Germany, but I think you can also watch some of the others, maybe Italy and that. So Germany dropped to we talked about yesterday, about 0.75% on the yield for its 10-year yesterday. We're back up to about 82 this morning, and that's going to be, like we said, one of the most important things for us to watch in the next day or so going forward, or the next week or two going forward. All right, let's look at BGA. Some of the banks really rallied hard yesterday into the close. BGA had dropped support intraday. A lot of stocks actually dropped support on an intraday basis yesterday, only to regain it and kind of make a major reversal. We've got this little broadening formation, maybe somewhat of an ascending triangle of such that we're kind of managing to hold support down around 153. This is going to be, it's one of these things. We need to see a breakout of this range before you can really make a call. Yesterday we got significantly below the range, touched the 200-day basically, and made a huge reversal off of it to the upside. So we'll have to see how this plays out today. But bottom line is, I think it was a big hold there. There's a lot of these stocks that made big holds. We'll kind of go through the list. Next one we'll look at is SA Breweries. Also made a major hold, came down to test major support at about 560, a touch below it went well below 560 on the day, but 560 there's really major support. We dropped below that significantly, actually, by about $5 or $6, only to make a reversal and close quite strongly on the day. It was actually one of the better stocks in our market, and you would expect that because it's a defensive, you would expect that it would outperform some of these others. I mean, this thing is absolutely puked about $120 off the top, but down to support here at 560. Nice reversal yesterday, reversed right back up to the 200-day, and I think this thing could be quite interesting in the next couple sessions. I'm going to actually show you Old Mutual in London because it's a little bit cleaner, but obviously it's more or less the same here locally. We're looking at a 5-year here, so let's just have a look at what this chart looks like. Let me take this all the way back. Okay, so major support here in Old Mutual. You can see how big that level is. Let me zoom it forward a little bit here, and you can see there that yesterday we managed to hold that on a closing basis. I drew this a little bit skew, but you get the point. There we go, right there. So we managed to hold it on a closing basis, a huge reversal on this thing into the close, as did a lot of stocks. And this thing's been absolutely hammered off the top, 20-odd%. And like we said, we're kind of holding on what's major support here. So I think we could have also put in a short-term bottom there in Old Mutual. Sunderland's another one that came down yesterday and really kind of kissed that 59 support level that we've been talking about. What's probably the most significant level to look at here. If this thing drops from 59, it could get ugly. But we held at 59. We basically traded down there to the number, I think, within a couple cents, and made a big reversal to close above 61 on the day. I think that potentially some of these stocks could have put in short-term or could have put in long-term bottoms even, over the next at least the next couple months. All right, we'll look at Telkom as well. Telkom it's just been a joke how vertical it gets. 3 or 4 sessions, this thing's moving 20% plus. So this is twice now. We double topped up there around 62, 63 bucks. Only 2 in 4 sessions. We tried all the way back down to 50. Yesterday we actually held that beautifully, considering the day, and that it never really gave this level up or gave it up significantly. I think was a big result. So also probably a decent little place if you like the stock to get some risk on. And then the last one I'm going to show you is Impalas, which also yesterday at one point had totally puked that level again. This is several days where we've gotten below that sort of 83.50 level and managed to kind of get back above it before it closes. I think it's a really important really important trade action to be holding that sort of level, getting below it intraday but holding it on a close. If we can hold this for another day or two, I would say that this thing's probably going to be able to reverse higher in the next month or two. And that's it for today, guys. Good luck out there.